Good morning, everyone. Well, the dollar is clearly reacting to the strong U.S. economic news, contrary to what was happening late last year. This confirms to me that the rally in euro-dollar in December was seasonal and probably influenced by repatriation by banks ahead of the asset quality review this year. That's why yesterday's action makes me even more confident in my bullish view on the dollar in 2014. The euro yesterday failed to rally even after German factory orders exceeded expectations, Eurozone retail sales rose the most in 12 years, and peripheral bond yields continue to decline, which shows increased confidence in the Eurozone. By contrast, yesterday's ADP employment report was even stronger than anticipated, and that encouraged those market participants who are expecting strong growth from the U.S. this year, and the dollar rose as a result. Subsequently, the minutes of the December FOMC meeting added little to our knowledge of Fed thinking beyond what outgoing Chairman Bernanke had said at his press conference following the meeting, so that was sort of a non-event. Nonetheless, the dollar continued to move higher, slowly, but it did grind higher. And this morning in early European time, it's higher than it was this time yesterday against all the G10 currencies except for the pound. The pound was the best performing G10 currency yesterday, after the Bank of England said mortgage availability increased in the fourth quarter of last year and will continue to rise as the government's plan to help first-time buyers improves access to mortgages. So go out and buy your house in London. Meanwhile, the Canadian dollar continues to weaken, and I think it's likely to weaken further later today when several Canadian housing indicators come out. Investors interested in riding these trends should look at and consider buying sterling Canada. During the European day, of course, the big thing is going to be the Bank of England and the ECB monetary policy meetings. The market expects no changes from either bank, so the focus will be on the press conference by ECB President Draghi afterwards and any comments he says about taking action in the following months if necessary. Especially, people will be looking to see if he makes any such comment after the slowdown in Eurozone CPI figures on Tuesday. Now, euro-dollar tends to be quite volatile on days when there's an ECB meeting, even when there's no change in policy. This year, it's had almost twice last year, it had almost twice the normal volatility for the year. And I'd recommend caution in taking any position ahead of the meeting, or indeed immediately afterwards. My expectation is that once again, Draghi will say that they stand ready to take further measures if necessary, but given his recent statements, I'd also expect him to stress that the economy is moving as they envision, and they don't see any further steps being necessary at this point. That could give euro-dollar some temporary support and provide opportunities to establish new short positions, in my view. As for the Bank of England meeting, those have tended to be non-events ever since the new system of forward guidance came into effect. The only indicator coming out from the U.S. today is the weekly jobless claims. The market expects them to be basically unchanged from the previous week, so it probably wouldn't be market affecting. For more information, including technical analysis, please read our full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. It's Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.